My last YouTube video was posted 9 months ago, or 305 days to be exact.
Oh, I've been waiting for this. Oh boy, I've been waiting for this.
And that video is right here. It is called Using ChatGPT to Predict the Exact Stock Market Bottom, and this was posted on April 8th of 2025. And right here you can see that the stock price of SPY, which is the S&P 500, was at $496. Now if you take a look at this chart right here, which represents the past year, every one of these candlesticks is 1 minute or 1 day, you can see that we are currently at $690.
We are back, baby. We are fucking back. We're back. We are back. We are back.
And this gray box represents that 2025 stock market crash. And if we go back to April 8th, the exact day where the YouTube video was posted, you could see that that was just about the exact bottom. At $496, this video was posted at this exact day. And from there on, the market rallied and has gone up roughly 40% just in the past 9 months. If you take from when I posted that video up until today, you would have made roughly 40% returns, which is insane because some ETFs and mutual funds only get that over 3 to 5 years, and you would have gotten those returns in the past 9 months. So the moral of the video that I posted back last year at this time, and the moral of the video today, is to just continue buying. Don't be scared of any type of fear or news or anything you hear that the entire market is going to crash or we're going to lose all of our money. Because the exact video I posted last year was screaming at you guys to buy right here at the bottom, and people sold out, people panicked, people thought the market was going to sell off more, but I bought along the way down. And then as the market recovered, I continued buying, but just kind of slowed up a little bit and didn't continue to contribute as much. And then the market not only hit all-time highs in June, July timeframe, but then last summer was a massive rally into this past fall. And really, it's been a strong market ever since then. And if we take a look back over the past 5 years, you can see that I highlighted a couple different areas of different crashes that we've seen. Some of you have never seen these crashes. This is 2019 when we had a little bit of a pullback here into the fall and winter time frame. But again, a massive rally heading into 2020, which then led us back into all-time highs and a massive push past all-time highs up until COVID crash, which we know and love, when everything was discounted within a month to 2 months. The market saw one of its biggest pullbacks in history. But again, this was another short-term crash where we saw massive amounts of price pullback in all different type of assets. Now, from there on, if you bought anywhere along the ride down, you would have made money on the ride up. And as we know, 2021 was a massive bull run year for the stock market, which was just, you could have bought anything at that time and made money. Now comes 2022, where real investors stuck around. If you stuck through 2022, you know that it was a rocky road from basically January up until about October of that year. It was a massive decline, and just over and over again, we saw no movement in a positive overall direction, which was really the biggest bear market we've had in the past 5 years. And then fast forward to 2023, heading into 2024, we had another bit of a pullback. This is our normal yearly pullback, 10 to 15%, nothing too concerning. Then we saw a massive rally. And then the rallied again up until 2025 when we saw that massive pullback due to tariff news and then AI and big tech stocks. But again, if you bought any time during the pullback here and then you let it rally, we not only hit all-time highs, but we broke through and created new highs. And now we're up here at $697. But with Bitcoin crashing $10,000 to $15,000 in just a couple of days, silver and gold has been on a massive run, but is all of a sudden crashing. And now big AI names such as Nvidia, AMD, Oracle, all these big stocks are continuing to fall. Oh no, Microsoft, it's over. Tech is over. The funniest part about all of this is, for one, the market crash that we saw was barely, 3 to 5%, if that. I mean, at all-time highs here at 697 to lows, we were at about a 3.5% pullback. We should be panicking when we start to see a 10 to 12% pullback back to the $600 area. And until then, I don't see us panicking anytime soon until we break through some of these support areas. And we're still in an overall uptrending direction. We've still been on a massive bull run. And without getting too technical with you guys, I just want the overall premise of this video to be buy the dip. If there's a stock out there right now that's on sale for you and you've been waiting to purchase that, look into potentially purchasing that here in the next couple weeks. The month of February has been known to be a more negative month in the overall stock market. So with that being said, I want you to take this into consideration when you start to hear negativity in the stock market, because if you didn't watch the video I posted last year about buying the bottom or buying on the way to the bottom, then you would have missed the rally to the top. And the same thing happens with our next big pullback, whenever that may be this year, whether this is the start of it right now where we just rip to all-time highs and from here pull back to $600, you don't start panicking until you start to see 10 to 12%. And that's not panicking you should be doing, it's continuing to buy more and more and more. Because unless you're looking to retire in the next 2 to 3, maybe even 4 years, you have nothing to worry about and you should be buying the hell out of any type of dip. Now, if you are going to be looking to retire, then maybe you can start to scale back if you're needing money in the sidelines, whatever that may be. But if you contribute $100 every week and you start to see a pullback like this in the stock market, maybe up to $200 or $300 because better prices and you're getting stocks at a better discounted rate, because eventually the stock market will return in a positive direction. You might see some short-term or maybe even long-term, like we saw in 2022, pullbacks, but overall in the end, if you bought any one of these dips, you would have made out positive and you would have made money. So that's the point of this video. Hopefully you guys enjoyed. If you're new here, hit that subscribe button, click that like button, and I will see you guys in the next video.